Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday. Made it to the end of the week. What's going on in the markets today? Well, the Dow's up about 40 points. NASDAQ's down about 80 points. What's going to happen going forward? Well, look at this is very interesting. This is the third down week in a row on the NASDAQ. Now, up until this little streak of down weeks, the most we've had is one down week in a row. All year long, there's never been two down weeks, and we're already at three down weeks. So something shifted in the marketplace. And I do think this market has a lot farther to come down. We're below the 10-day, below the 20-day, below the 50-day, and we're coming down to the 200-day. Now on the S&P, that 200 days right around 4,100. But if that doesn't hold, we'll probably hit down around the 3,500 level. But be careful, nothing goes straight down. And we're very oversold right now. Very oversold right now. We're due for a bounce. We'll probably get the bounce. Now, why do I say we're oversold? All right, here's a tip. Look at. Go to these are the McClellan oscillators. Just pull up stockcharts.com, type in $NAMO and $NYMO. And you can see how oversold we are. Now, anytime that you are below 60 is oversold. And if you get both of these down below 60, then you're really oversold. And right now, the NYMO is down about 90 and the AMO down about 70. So we're very oversold right now, which means we're probably going to get a bounce up from here. Now, how high is the bounce going to be? Maybe it's just a short little bounce before we head down lower. Maybe we get a little bit of a counter trend and head up a little bit and then come down. But this market's still got a long ways to the downside to go, but it's right now oversold, very oversold, due for a bounce. And I think we're going to get that. I think we're going to get a little bit of a bounce starting probably today into next week, but then we'll start to come back down again. Just my take. Your take may be completely different. That's perfectly fine. Let's get over to the real estate market and see what's going on there. All right. So the Redfin CEO, now he came out, he was talking on a couple of different broadcasts, couple different shows, and he says that real estate is at a standstill. And he'd be correct. The buyers and sellers, there's not many transactions going on right now, and this is a very tough market for real estate agents, for Redfin, if you will. But he says that this is the summer of despair, and we're at the rock bottom right now. I don't think so. I don't think so at all. I think we're in about the second inning. We got a long ways to come down. Once again, just my take. Now, those moon boys, we're going to go straight up to the moon. Now, if I were writing an article for like Yahoo, what would my headline be? Well, here would be my headline. Hurry up. This is going to be the last chance you get to buy a house at the high. A lot of people want to buy houses at the high. A house comes on and the people still buying it. This is going to be your last chance to get to buy the prices up here, because pretty soon it's going to be coming down a lot lower. Now, people say, but Mike, that's impossible. You're always talking a crash. You're always saying we're going down. Well, right now, I do believe that. Now, I've made a lot of money in real estate over the years, and there's been some great times to buy, fabulous times to buy. Right now would not be one of them. Right now, we have elevated rates still, and we have elevated prices. Something's going to give. Right now, everybody says that I keep comparing this crash that was coming up to the crash of 2008. Now, I agree they're very different. They're very different, but here's the similarities. Here's the similarities. In 2008, you see, nobody could get money out of their house. Nobody could pull money out. You see, they've been living off their house as a piggy bank, and they go refinance. But what happened in 2008? Well, all the equity disappeared. Nobody could get money out. There was no equity to pull the money out. Now, right now, we got equity, but nobody can still get money out of their property. They can't refinance because they're locked in at 2.8. And right now, rates, they're going up. They're 7.5, headed towards 8, right? 8%. Maybe we're going to hit 9%. We're going to talk a little bit more about this. But so that's the similarity. disparity between now and 2008. In 2008, people couldn't get money out of their house, and right now they can't get money out of their house. People need to get money out of their house to live. They're overextended. They can't make their payments. Inflation, expenses, everything's going up on them, and they have no money. They have no way to get it out of their house. Now, granted, they got the equity, and that's why they're going to be forced onto the market. Pretty soon, it's not going to be their choice. Not going to be their choice. But why do I say that we're going to come down 50% this time, and we only came down 34% in 2008. Why do I think we're going to come down? Well, I think we're going to come down more because the bubble. The bubble's bigger, right? It's a bigger bubble. We've inflated this bubble. But here's the thing. I really believe that 2008 never finished. I think we're just still playing that out. We never let it fully come crashing down. You have to flush out the market before you get the next bull run. Now, we've had a bull run, but it's been all artificial stimulation from the government. It's come down to one word, and that word is debt, right? That's the word. The government, when in 2008, the government was 10 trillion in debt. Now they're 33 trillion in debt, so 23 trillion more in debt. And of course, the Federal Reserve, they're more in debt. Their balance sheet went from 1 trillion up to about 9 trillion. So this extra $30 trillion of debt has distorted the marketplace. It's a distortion. It's a mirage. It's not real. It's very fake. The economy is fake. Everything that they're trying to keep from crashing. They don't want to feel that pain. But the pain is coming. They don't want to feel the pain. I don't want to feel pain. I don't want to see it. I wish we could just keep printing money forever, but we cannot. We are overextended, and we distorted all these prices. Look at my home. It's a little tract home. It should not sell for $2.5 million. It shouldn't even sell for half of that, but I think it will just come back to the halfway point. But it's ridiculous, right? The price is distorted by all this printing of money. And now, what's interesting? Okay, right before the 2008 crash, what happened? Well, credit cards started spiking up. They started spiking up. They went from 400 billion to 600 billion. They topped out around 800 billion, 850 billion. Then we had the crash. And the crash kind of brought everybody back to earth. And anyways, that crash brought the debt back down. So credit card debt went back down. But what's happened right now? We're getting that spike up again. Just a year ago, we were at like $750 billion. And now we're over $1 trillion. We're spiking up in that debt again. And credit card debt, as you know, very high payments, 20, 25% interest rates. Now, who would borrow money at this price, right? Who would put money on their credit cards at 25%? People that are desperate, people that don't have money, people that are trying to hold on to their house because they can't get the money out of the house. So where they got to get the money from? They got to get it from the credit card. And in 2007, 2008, we saw the spike up right before the crash. And now we're seeing the spike up again right before the crash. I'm telling you, there's a problem with debt. Debt right now, it's just overextended. Everybody's overextended. In 2008, there was about $600 billion of auto debt. Right now, we added a trillion, 600 billion. Now we're at 1.6 trillion. So we added $1 trillion of auto loan debt. That's crazy. Student loans, they were about, 500 billion in 2008. What are they now? We've added more than $1 trillion. 1.8 trillion right now. So we've added all of this debt. The government's added all of this debt. Everybody's taken on more debt. Corporations have a lot more debt. They got a lot more debt, right? And this is what problem right now. This has distorted the prices. The prices are not real. Yes, right now is your last chance to go out and buy a house at these high numbers. You're not going to get a chance to buy up here anymore because the prices will be coming down. Now look, there's this thing, it's called the yield curve, right? And it's inverted right now, meaning the 2-year is paying about 4.9, rough numbers, 4.9. And the 10 years paying 4.2, right? Okay, so it's like got 70 basis points and it's starting to reinvert, starting to get back to normal. But that is where the bad things happen. That's where the recession hits. That's the time that everything comes crumbling down. Well, you're getting that long end of the curve. It's starting to go up, right? It's starting to get up higher, starting the long end, the 10 year, 30 year. Those rates are starting to go up, but the 2 years kind of hold steady here around the 4.9, but the long end of the curve, that just means that the Federal Reserve is starting to lose control. They can control the short-term rate, but they can't control this long-term rate. And when that takes off, it's going to get real ugly. Now, here's the thing. All right. So we got mortgage rates right now. Okay, we got them running what, of 7.5. Okay, for the 30 year, but yet the 10 year is about 4.25%, and that's usually tied right to the 30 year mortgage rate, right? So think about this. You got 4.25. Why are mortgage rates approaching 8%? That's 3.5, almost 4 times. Why are they so much higher above the 10 year? It's because the banks don't trust the borrowers. The banks know the borrower is going to default, so they have to charge a premium right now. Normal rates right now on mortgage rates would be about 1.75 is the historical norm that the 30 year is above the 10-year rate. So 10-year rate being about 4.25, add 1.75, they should be around 6%. Mortgage rates should be around 6%, so banks have to charge a premium right now because the borrowers are going to default and the banks don't want to be left holding the bag. So they only want to give very creditworthy. And even if you're creditworthy, these loans are going to be harder and harder to get. There's going to be a bigger premium built in, and this is just, it's the premium that they build into this is just because they don't trust you, because they know you're going to default, because they know you're buying an overinflated house. So they charge this premium tack it on to the 10-year rate to get their 30-year rate. That's how it works. All right. So when I was a young guy, I thought I was a genius. I thought I was the smartest guy in the world because I went out and bought a house, right? I bought a house, and the house you got a lot of leverage. Now, I had to put 20% down because I had no major source of income that could be reported. So I had to put 20% down. I got a loan for 80%. And I bought that first house, and it went up. And I thought I was a genius, right? Because the market went up. It had nothing to do with me. I was a genius because I was leveraged in a hot market. Your leverage would put 20% down and your leverage 80% out, and the market goes up. It's like I turned my $40,000 into $120,000. I tripled my money. I was a genius. So what I do, I went out and I did it again. I bought 2 houses, right? Not just one, because I'm a genius. I know what I'm doing. So I bought 2 houses, right? Okay, so I got 2 houses. I'm leveraged out. And I go, well, I wanted to go buy a third house, but the bank turned me down. They said I had too much leverage. I told the bank like they're crazy. So I went and found one that was financed by an owner, and I got my third one. And I just thought I was a genius because the houses were going up. But then it turned. The houses started going down. I lost everything right there. I lost it all, right? I was leveraged out. I had too much leverage in the marketplace. And now leverage is great when things are going up. You feel like a genius. You feel like you're the smartest person in the world. But that leverage is a two-way sword, right? When things start to go down, it can go down really fast and really hard, and things you don't see coming. Now, I knew a lot of investors back then, right before the 2007, 2008 crash. They were buying houses, and they were doing the same thing I was doing. They're splitting it up, buying 2 houses, splitting those up, buying 4 houses, and they became multimillionaires. But in 2007, 2008, it all came crashing down. They lost everything. Now, one of my heroes, his name was Derek. He was in the loan business. Anyways, and he was just moving money around. I mean, he was wholesaling money to Countrywide. Now, Countrywide was the biggest broker at the time, started by Rudy Muzzillo out of his apartment, okay? And anyways, Countrywide, he did these loans. He became the biggest lender in the United States for house loans, and he just started out of his apartment in New York, and he became very successful. But what he was doing back then it was a little bit shady. And my friend also, he was doing a lot of this shady stuff. I'd bring them all my real estate loans, and these were people that they couldn't afford to buy these houses, but that's okay. Don't worry, I got the magic man, Derek. So Derek asked me how much money they make a year. About 40,000. He'd say, that's not enough. We need to write down 120,000. So he just scribbled it out and put in numbers, right? I mean, they were doing crazy stuff like that to get these loans passed through because nobody was checking anything because prices were going up and everybody was making money as fast as they could and nobody wanted to report anybody. Look, there was so much fraud going on back then. There was so much over leverage in the debt market. But long story short, anyways, we could get these loans through and Derek became very successful. I mean, he had these offices. Oh man, he was my hero. Glass mirrors and all his offices had like 40 or 50 people working for him. He was king of the hill in my area. I loved Derek, man. And he was a great guy, right? He was your buddy. He was your friend. He could get any loan through. Any loan I wanted to get through, he could do it. He could do it. I just turned my head and not look why he changed the numbers on the applications. I mean, there was all this fraud going on. Well, anyways, in 2007, 2008, he went from being this genius to being this idiot. He lost everything. And this guy had tens of millions of dollars. He was so successful, so profitable, but within 6 months time, it just spiraled out of control. I'm sure a lot of the authorities are looking for him. I really don't know where he went to. He just disappeared. All of his properties that he owned, they went on to the MLS and they were all short sale. Oh, it was just terrible, just being wiped out in 6 months' time. That's how quickly it can happen. That's how quickly things can change. I mean, things change really quick out there in this real estate market. There is no price discovery right now. This is a fake market. These prices you're seeing, they're not real, but this is your last chance. Your last chance to buy a house up here at the top. It's the very end of it. They're coming down. There's going to be a lot of pain. All these people that thought they were a genius going up, they're not going to look like a genius. It's easy to be a genius when the market's going up and you're leveraged out. You made the stretch to get into the home. You look like a genius. You got 200,000 in equity, 300,000 equity. All that equity envy's out there. You can hear the talks at the parties. People comparing their rates. There's rate envy. There's equity envy. You mark my words, a year from now, it's going to be a lot different story. It's going to be how to sell my house. How do I get out of this market's crash? What do I do? How do I get rid of this house? I can't afford the payments. I'm locked in at 2.8, but I'm 100,000 underwater. Oh, I got you beat. I'm 200,000 underwater, and I'm locked in at 2.7. I can't sell. I'm locked in. Look at people's equity's going to be wiped out, and they're going to be talking about how far underwater they are. It's going to be different. It's going to be sad. Anyways, it's going to happen. That's just my take. Maybe your take is that houses will double from here. Everybody's got a different opinion, but it's Friday, everybody. Get out there, enjoy the weekend. But first, give me the thumbs up, hit the subscribe button. I want to talk to you again next week. A lot of stuff going on right now. This is getting to be very exciting. Get out there, everybody. Enjoy the weekend. Bye-bye.